going on YouTube? It's of course your boy Alexandrus, and today guys, as you can see by the title and thumbnail of this video, we have quite an interesting topic on our hands because we will be talking about artificial intelligence, and we will be talking about how AI could move the entire market and how it is completely reshaping markets. So quite an interesting topic, at least I think so, and I've prepared a whole presentation to go over this topic so we can dive deep into it together and understand it more. Before we start with the video guys, as always, I need to let you know that I'm not a financial advisor. You should always do your own research and you should always do your own due diligence because I don't take any responsibility for your actions. And with that being said, we can jump right into this video guys. So let's get started with the presentation. I hope that you guys will like it. Took me a moment to make, so I hope that you will enjoy it. So everyone is looking at AI right now and asking the same question: which AI stock is going to move next? But I think we are looking at this story too narrowly, you know? Because when something major happens in AI, the impact does not necessarily stay inside the technology sector. A single AI event can move through semiconductors, data centers, electricity demand, commodities, and eventually even influence expectation for interest rates and dollars. So that means AI is becoming much more than a technology trade. It is becoming a cross-asset market history. So it's quite an interesting sector here, guys. So let's start with the first step. Imagine a major hyperscaler announces that it is increasing its AI capital spending, or an important company reports stronger than expected demand. The first reaction is usually in semiconductors and AI-related stocks as well, because more AI investment means more demand for computing power. But that is only the beginning. Those chips obviously have to be deployed somewhere, so more computing power requires more servers and more data centers. And those data centers require reliable electricity and supporting infrastructure. And you guys already can see where it's going. As you can see, it's literally like a chain reaction here. So what starts as an AI spending decision inside a technology company can quickly become a much broader economic story. And the chain is essentially AI capital spending, followed by semiconductors, then data centers and electricity demand, then energy and commodities as well, and eventually broader macro expectations around things like rates and dollar. So that's how it basically looks like. And obviously each link has tradable assets, which is also pretty cool. So you have like different chip makers, you have different companies in power as well, you have different commodities. So I think that's definitely a thing to look at as well. So I wanted to also talk about semiconductor momentum. And the numbers here show just how strong the AI cycle is becoming, and that's fully true, because the semiconductor market has already shown extremely strong momentum. The Philadelphia Semiconductor Index, or SOX, was roughly up 49% in 2025, as you guys can see. And then in 2026, it went through an even stronger period, reaching a record of 17 consecutive up sessions and gaining around 41% during that run, which is absolutely crazy. And at the same time, global monthly semiconductor sales reached $120.6 billion in May, as you guys can see. And that's up 104% year over year. Insane. And that was the 15th consecutive record month. Absolute madness. So the semiconductor side of this story is already showing us just how strong the underlying AI investment cycle has become. And if you think about those companies, you might think about Nvidia, for example. Guys, it is not just Nvidia, let me tell you that, okay? So this is where I think the story becomes even more interesting, because when people talk about the AI boom, they usually start with Nvidia, but the investment cycle is much broader than one company. The brief points to strength spreading from the leading chip companies into a wider semiconductor ecosystem, including equipment manufacturers such as Applied Materials and Lam Research, as well as design software companies such as Cadence and Synopsys, for example. And Broadcom's AI semiconductor revenue has also risen sharply, while Micron has benefited from the the growing demand around AI infrastructure and memory. So again, as you can see, it's going from one leader to another company to software designers, so it's like a whole chain again, okay? So rather than asking only which AI stock might go up, I think a better way to look at this is to follow where the capital is actually flowing. The more AI spending expands, the more layers of the supply chain start becoming relevant. So this is definitely the way to look at it, in my personal opinion. And you have everything also explained here on the graphic what I just talked about, which is another thing to look out for. And now guys, let's move to chips and power. So from chips to power, the physical side of the AI boom, this is the next slide I've prepared for you guys, because more AI computing requires real infrastructure and massive energy. So obviously the semiconductor story is still only one part of this chain, as you guys can see. And once you have more AI chips being deployed, you need more infrastructure to actually use them. You need servers, you need the data centers, you need networking, you need cooling for it, because it's a lot of devices obviously, and most importantly, you need electricity. So this is one of the most important parts of the entire AI story, because the spending is moving from something that looks purely technological into something very physical. And the more computing capacity companies want to build, the more infrastructure they need to support it. And that means increasing demand for power and the systems required to deliver it, obviously. And this is why the AI boom can start creating effects far beyond technology stocks. So, you know, the real electricity and data center demand is sitting behind the accelerating AI capital expenditure cycle. And let's also talk about energy and commodities. So building and expanding this infrastructure requires physical materials, and it also requires additional energy capacity, which brings commodities into the picture as well. So copper is one of the most obvious examples because it is closely connected to electrical infrastructure and industrial build-out. So now look at what has happened. The story started with an AI investment. It moved into semiconductor demand, then it moved into data centers and electricity, and now we are looking at energy, infrastructure, and commodities. And this is exactly why I think the AI trade should not be viewed as just technology sector trade. The whole point of this chain is that one event can propagate into completely different markets. And let's also jump into the macro, from commodities to macro, because this is another interesting switch up here. So once commodities and energy start moving, you can eventually get into the macro side of the story, right? Because changes in energy prices can influence inflation expectations. Changes in inflation expectations can affect how markets think about interest rates, and that can influence currencies and broader asset price. So, you have a very good example, for example, of using gold. So in 2026, a sharp rise in energy prices pushed inflation expectations higher. Markets started worrying about a more restrictive Fed, and gold experienced a major repricing as the underlying macro assumptions changed. The important point here is not that gold is an AI asset. Like, obviously it is not, right? The important point is that a change in one part of the macro environment can create very large moves across completely different asset classes. And that is the kind of cross-asset thinking I think is becoming increasingly important. But let's get back into one key takeaway, guys. And for this, I will open the graphic number 1 here for you again. So, when you see an AI headline, I think the better question is no longer just what happens to NVIDIA, right? Because everyone knows NVIDIA, everyone talks about it. It is what moves after NVIDIA, and what happens to semiconductors, what happens to the data centers, right? What happens to the electricity demand, what happens to commodities, and eventually what happens to the rates, dollar, and the macro. So, because every step of the chain represents another market that can react, and this is where today's sponsor, BingX, fits into the picture. So let's welcome BingX on our screen today, and well, this is where they come in. So BingX is positioning itself as a multi-asset trading platform that allows you to follow different parts of this broader market story rather than looking at everything through the lens of a single asset class. The idea is very simple. When something starts moving, you want to be able to follow where that move goes next. And the BingX positioning is the world's leading multi-asset trading platform. So as you can see, they have a lot of popular trading pairs here, starting from commodities throughout stocks and everything that you might need to start your trading journey here in this beautiful sector. So let's also get back to their main page for a second, because their brand mindset is really cool. It's the first platform people think of when something starts moving. That's what their brand mindset is. When it comes to their brand proposition is connect. Discover what's moving, then connect what's moving, and then trade what's moving. And it's really cool again. And as you can see, they have many pairs here, including the most popular commodities such as gold, for example, which you can pull up as well. And when you look at the markets they are covering, it goes beyond crypto, obviously. You have like stocks, you have essentially everything. You have AI related events as well, commodities. You also have crude if you want, if it's in the range of your interest, to also trade crude oil, as you can see. You have S&P, so they have pretty much everything, like global indexes, foreign exchange, as well as macro and policy events, including things like CPI, NFP, and Fed decisions. So they really do have it all. And the same cross-chain asset chain we have been discussing throughout this video can be followed across multiple market categories. So when it also comes to BingX hotspots, they have BingX events here. So they have like a dedicated hotspot coverage for its event section, as you can see. They also have an academy, and obviously they have a lot of social media accounts, starting from their Twitter here, or X as you like to call it, with BingX Buzz market updates, which you are also able to see throughout this video, and which I will probably show you again in just a second. They also have their Instagram, so they really have it all. And through ongoing hot topic content, BingX continues to strengthen the platform's differentiated mindset of being fast, broad, and deep. So fast, obviously faster at discovering and responding to market hotspots. Broad, connecting a wider range of markets, asset, and product opportunities, and then deep, providing deeper hotspot insights and trading experience. So instead of only looking at market after something has already happened, the idea is to have a place where you can follow the events and themes that are actually moving the markets, right? So they also have a really cool campaign. If you go to their promotion center, to their events section, you can see this beautiful event here where you can trade top trending assets, 2 million USDT price pool awaits. So they are running campaigns around major market hotspots. Right now there is this campaign, as you can see. You can basically trade those assets and share a $2 million price pool. And trust me, they do a lot of these events, so it's definitely worth to keep an eye on this. I will leave the relevant links in the description so you can check out the platform, the current events, and the campaign yourself. And also guys, make sure you join their Telegram so you are also updated with everything that's happening within BingX. They are also actively giving many recaps regarding companies, regarding the movements of companies, revenues, and everything on their X page. So it's another thing worth following. Same with gold, as you can see. So if you want to be updated with what's currently happening in the market, BingX is the way to do it. So the final takeaway, guys, would be that, the bigger takeaway from this video is simple. AI does not necessarily stop at AI stocks. Might sound simple, right? But the move can travel through semiconductors, data centers, electricity, commodities, and eventually the broader macro environment, as we discussed in the presentation. And once you start looking at markets that way, you stop asking only what is moving right now and start asking what could move next. So if you want to explore these markets yourself, check out BingX through the link in the description. And as always, guys, this is not a financial advice. Do your own research, understand the risks, and never trade with money you cannot afford to lose. Thank you so much for watching this video. I hope that you enjoyed it, guys, and I will see you in the next ones coming out soon.